PC weakness is not something new affecting the semiconductor market, but we recently got some updates for the upcoming Q3. Let's take a closer look on today's episode. So on October 10th of 2022, IDC posted the worldwide PC shipments declined another 15% in the third quarter of 2022, according to the IDC tracker. For those not familiar, in the second quarter of 2022, worldwide PC shipments actually fell 15.3%. So we can definitely see the overall kind of PC slowdown happening in the market right now.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
If we take a closer look at stock prices right now, Intel's down roughly 0.32%. We can see today on October 11th, the stock market started off pretty bad before kind of pulling a little bit back up. We'll see how we end on the day. Nvidia, another company here, which very similar, down 0.58%, but it was down much lower earlier today. We can see both these stocks are pretty close to their 52-week low. Nvidia sitting at $116 with a 52-week low of $112. Intel sitting at $25 with a 52-week low of $24.69. So I do want to say it does seem like the market to some extent was expecting obviously the PC shipment slow down. This is something we've heard numerous times from other kind of avenues of information. We've heard preliminary results from certain companies as well that can kind of confirm this slowdown. So that's why I believe even though a 15% drop is pretty big, we don't see too much price movements. IDC does mention that right now global shipments totaled 74.3 million units during the third quarter of 2022. Again, these are just preliminary results, but like I mentioned, down 15%. One thing to know though is shipment volumes remain well above pre-pandemic levels when PC volumes were largely driven by commercial refresh due to the looming end of support for Windows 7. So it definitely sucks to hear PC shipments down 15% for the second quarter in a row. But again, when you kind of put it into mindset that it's still above pre-pandemic levels, it kind of shows you that, hey, things are not as bad as people make it seem. Obviously, it is bad compared to kind of the revenue growth that some of these companies can see. And if you are enjoying the episode so far, make sure to hit me with a thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. And the main reason I showcased Intel and Nvidia right now is these are two of the main suppliers. Intel obviously has a huge market share in the processor world, and Nvidia is the market share leader in graphics cards for the kind of desktop market. So these are going to be the two companies that are going to be affected the most in forms of revenue in the short term of things. Both these companies gave us pretty weak earnings guidance for the upcoming quarter. IDC does mention that Apple is the only exception of seeing growth. Their third quarter supply increased to make up lost orders stemming from lockdowns in China during the second quarter. Apple this quarter shipped out about 10 million units compared to same time last year it was 7 million units, and that was a growth of 40% year over year. And like IDC mentioned, it was also a growth quarter over quarter. It does seem like Apple has 13.5% of total market share, where same time last year it was about 8.2%. Again, one of the main reasons is this is the only one growing while all the other top leaders, for example Lenovo, was down 16.1%, but it still sends roughly 16 million units this most recent quarter. IDC does mention another thing people should kind of keep an eye out is average selling prices and how they're trending this quarter. Average selling prices have been higher in the previous quarters due to the overall shortage. With average selling prices being much higher, it does mean that margins tend to be a lot better. But now if we have things like oversupply and under demand and companies need to get rid of their inventory, we're going to start to see a lot of discounts. And we actually talked about that in yesterday's episode when we took a closer look at Adobe's report, where there are going to be heavy discounts, especially in the electronics market, in the PC market for sure. So it does mean some of these margins are going to decrease dramatically. Just taking a closer look at some of the big companies that deal with PC shipments, Dell right now sitting at $34.28. Pretty much half of its 52-week high of $61. We also see Lenovo down roughly 40% on the year, sitting at $13.77, super close to its 52-week low. HP Inc., another leader here, is sitting at $25 right now, sitting super close to its 52-week low of $24.6. I personally don't invest in most of these companies. I really don't like the hardware market, but some of these do have some other kinds of solutions that can probably help in like the server, prefer the data center, the clouding world. One thing I do want to say is Dell Tech, 3.85 dividend yield, Lenovo 7% dividend yield, HP 4% dividend yield. But as kind of margins are expected to decrease, I wonder if some of those dividend yields are expected to pull down as well. So take care, have a good day, and see you next time.